All right. Good morning. Good morning. How's everybody doing? Can everybody hear me all right and see the screen? Looks like we got some people coming in. And as you can see up on the screen, and I've already kind of announced and said what I'm going to be going over, but um, I very briefly touched on, and I hit a few of the different variations last week in the live stream about the Asian range. And I'm going to be talking about it a bit more today. That's going to be my main focus for today is the Asian range. And something that I tried to get across last week, and that is the trade setups are still the most important thing. I'm only going to be using the Asian range as a filter to be able to identify the type of day that it is. It's going to help with profit targets. It's going to help with understanding, is today an expansion, a range expansion style of day? Is the market trending? Or is the whole day just a big trading range and I need to trade it as such? So that being said, before I get started, just know that I will be going through and stopping and asking for questions. As always, I want to answer everybody's questions. I don't want anybody to feel like they're being left behind. So at any time, throw your questions up there. I don't mind, but I'm going to stop at certain portions and get those questions answered. Jumping right in, some of the times. Oh, and before I start again, I want to say that this whole slideshow, just like every week, okay, the slideshow is in the description of this video, and you can follow along with the slideshow or save it and go back and reference it, as well as the pips to profit indicator. You can find that on Discord, and you just click on it and add it to your chart and favorite it through the link. It's not public on TradingView, so you have to add it through the link. All right, so let's get going. Times, the Asian session times. And I know that according to our 12 candle window, we know that the times for Asia are 8 to 11, and then London 2 to 5, and then New York 8 to 11 a.m. I understand that. Got it. For this and for back testing purposes and for my understanding of the Asian range and the times that are actually important, 8 p.m. to 2 a.m., I'm taking the highest high and lowest low of this range and I'm going to project them across, and that gives me my range. And from that, I can further identify what day or what kind of template we may be in. So, Asian range, this is what it looks like. So the highest high and the lowest low in between those times. This gives me a very solid way of, the time never changes. 8 o'clock is still 8 o'clock, 2 o'clock is still 2 o'clock, and within those times there will be a high and there will be a low. And there will always be a middle section, the 50% level of that Asian range. And like I said, this is the highest high and the lowest low, and basically just creating a box. And I understand that it's like, oh, wow, that's cool. There's a box on the screen. How does that even help? And as I go through this and as I explain it, it's going to make more sense. And at the end, I'll be going through live charts and, of course, running back through a few weeks, or like I'll just do a review of last week using this method, and everybody can kind of see what I'm getting at. Why is the 50% level important? Okay. The 50%, for anybody who doesn't know, 50% of ranges is important. Within the day's range, within the week's range, the 50% or for the whole week, right? The 50% level is important. And understanding opening range and initial balance, the Asian range is essentially the opening range for the day, the whole day. It's the first period within the day, the first session. So that is the theory and the idea behind using this. You're basically using an opening range strategy within the day. Okay, so you've got your opening range and initial balance theory and idea for the whole week, and then you can basically frame the day using this. So, can be used to visualize the trapped volume. I'm going to explain that here in a second. Acts as support and resistance in a breakout pullback of the Asian range. So if the we've got the box and it breaks out of the range and pulls back, a lot of times you're going to see it pull back to that 50% before continuing in the upwards direction. Sorry about that. Before it continues in that upwards direction. And then also the 50% level can be used as profit levels. Here is an example of the 50% acting as an adequate take profit level. And depending on time, all right, so this time lines up for the New York session for the sell. But this is the idea as well for the breakout pullback, and you can see that it continued back up. So if this would have happened at different times, because remember the times are obviously very important for everything that we do in this style of trading. If this would have occurred at a different time, like we were pulling back to the 50 and we were, let's say, coming into the 8 o'clock session, then this may have been a different scenario. But from this, I don't want to just show this as the 50%. I want to show the trapped volume, okay? We have this big box of volume, right? Most of the day has traded under this 50% level, right? So it's safe to say that most of the day has traded at this point under the 50%. And then notice how they come out of the box, right? We get one push up, a consolidation, a second push up, a consolidation, and then we have this third push up and then a consolidation at the high of the day with the M, which is exactly what you want to see. And of course the follow through back to the downside for the sell in the New York session. Now, I'm going to get into a few of the different variations that I spoke about last week with some crude drawings that kind of look like, maybe a kindergartner did them, but hey, we got what we got, right? So I've got these different variations. I've got about 4 of them, if I remember correctly. And it just helps you to frame the day in a way that the market can only do 3 things. It can break out and trend, it can break out and reverse, false break reversal, or it can stay in a trading range. If you can narrow it down to what the day is doing, you can it'll make it much easier to build a trading idea. So this first one, stop hunt low or high, and then break out and trend. So that is Asian range. We have a stop hunt high, and then the market follows through to the downside and then trends to the downside. And then on the flip side of that, Asian range, breakout, and then basically false break reversal and then trend in the opposite direction. Stop hunt low, rise. Here is the example of that using candlesticks. You have a very large consolidation because up until this breakout, this is a consolidation, right? This is my no trade zone. I want to be trading from the outsides because think about the opening range. That's exactly what you do with the opening range. Market breaks out. Notice the 3 pushes down out of the Asian range. 1, 2, 3, and then this micro W. This is a 3-minute chart. The micro W, the higher high, higher low, and then the reversal. So the stop hunt low, rise, trend the market. Stop hunt high, trend the market. So stop hunt high, and then now we're going back down. Okay. Same concept. We have the 50% down here. They come out of the 50%. 1, 2, 3. Now we have an M. If this were to break down, it does break down. All right. And then we get 3 levels of drop. We have an M at the high of the day. 1, 2, and then the third push down. The whole concept of the Asian range is, this master pattern. You have the Asian range, and once you have a W at the a W at the low of the day, you are expecting 3 levels of rise. Once you get an M, you're expecting 3 levels of drop. and then using the time. If you've already achieved 3 levels of drop, kind of like we did in the US dollar, Japanese yen, GBP, JPY last week, if we've already achieved 3 levels coming into a session, then you can maybe expect a reversal. So here is the breakout and trend model. We have a W and 3 levels of rise, an M, 3 levels of drop. And this is where they do not false break on the other ends of the range, and they just go unidirectional. So like this, we have W, low of the day, 1, 2, 3, and of course the extension. Same concept though. This is a trending market, and you get your 3 levels. That is the bullish version. And then we have breakout and trend, the bearish model. We have an M at the high of the day, and then 3 levels down. For everybody watching, does anybody have any questions up until this point? I understand that I'm going at a fair pace, but I just want to show these ranges and explain a little bit about what to expect within the day, and then I'm going to get into how to frame trading ideas around this. But as of right now, how's everybody doing? Does anybody have any questions? Blow up the chat. Even if you don't have any questions, just blow up the chat. That's fine with me. All right, no questions. I'm moving on. So, actually, here we go. Here's some questions. Are 3 levels measured ranges? No. Now understanding that, yes, there are 2 different levels, or 2 different kinds of 3 levels of drop, okay? These are 3 pushes. So 3 levels in pushes, right? See this low that's formed, a pullback, and a drop. So this would be like drop level 1 consolidation, drop level 2 consolidation, drop level 3 consolidation. Why does the W not form directly at the Asian high? Well, the W is going to be at the low. You want the W, or I think I just read that right. Why does the W? Yeah, so the W is going to be at the low. W's are low of day, M's are high of day. You mix that around, but idea is still the same. 3 levels measured. Good morning, all. All right, so looking good. Let's keep going. How does this information and understanding this information help? First off, and like I've already said, but I want to keep saying it, this is not a substitute for pre-existing trade setups. If you do not understand the trade setups, that's fine. We're all getting there. Everyone's going to get there. But it's not a substitute. Now, could you trade this as its own thing? Maybe. But that's not what I'm doing. I want to explain this in a way that is incorporated with the other trading setups. What it is meant to do is aid you with trade management. Understanding the range can help determine take profit areas such as the 50% level, expansions of the Asian range, being range expansions. A lot of people have been asking me, well, how do we know if it's going to be a range expansion day? I'm going to show you that here soon. Other end of the range being high or low. So like if it's a trading range day or a false break and it pulls back inside the range, you could be targeting that 50% or the other end of the range, and helps determine if your thesis is correct or if it has already played out. Kind of like last week. Like I said on Friday, I had an idea that we were maybe going into the 3rd week of drop on some of the Japanese yen crosses. And we had already had 3 levels of drop within the day. So my idea started to change. It was day 3 of the 3-day cycle. I thought maybe there was going to be an explosive trend trade. and we're going to close down low. That's not what happened. I flipped my idea based off knowing this information and was able to take a successful trade. And pretty much exactly what I just said is a tool for trade accuracy using pre-existing setups. False break. All right, so now what I'm going to do is I've already framed some of the different variations, right? But now I can go through and confidently tell you exactly what I'm looking for each variation, for each kind. So if there's going to be a false break, right? If I'm looking for a false break, or if I come to the screen and I see that we've came out of the Asian range, and let's say that there's 2 pushes and we're coming into the 3rd push and the New York session's about to start, okay? A lot of people are probably thinking this is going to the moon. And it could. But I need to see evidence that it's not. And if it becomes the latter, where it's, this could become a false break, okay, now I need to make a few other decisions. But what am I looking for to identify this false break? 3 pushes or 3 levels outside of the Asian range prior to my session beginning. And please notice the times down here. I know I don't have them annotated necessarily on the chart, but you can see 6, 9, so in between here's 8. So, 8 o'clock is right in here, and we've already had 1 push, 2 pushes, the 3rd push out of the Asian range. Coming into New York, maybe this is a reversal opportunity. Something to look for. The stop hunt, 25 to 50 pips out of the range. A lot of times this is going to happen in the London session. Be in combination with a trade setup, such as a signal day, the opening range initial balance of the week, so high and low of the week opportunities, and of course the 3-day cycle. In this example, you can see the 3 pushes. This is a different example from this one. This is the British pound, Japanese yen on the 15-minute chart. This is British pound, Japanese yen on the 15-minute chart as well on a different day. But same exact concept, okay? 1 push, consolidation, 2 push, consolidation, 3 push. M, they break down. Look at the time. Right after 9, 1, 2, 3 to the high and an engulfment on the 15-minute chart. This is 3 days, previous day's high, 3 sessions of rise, 3 levels of rise, 3 pushes, and an M at the 9:30 time. Okay, this is like 5-star, everything I've got kind of trade setup. It goes from high of day all the way back down to low of day and expands. Breakout and trend. Okay, so like I said, I just went through the false break of exactly what to look for. Before I move on, is there any questions about the false break and what to look for? And maybe anything that you're thinking of that it's like, wow, I just don't understand. If not, throw that up too. Let me know that you're good. Also, I've noticed that there's 113 people, or around 56 people currently in here, but the stream's only got 20 likes. I do all this. I put a lot of effort into this, and all I ask is please just go and like the stream. It really does help the algorithm and me as well. So just do me a huge favor and hit that like button before I answer any of these questions. Let's see, 9 makes sense. This 1, 2, 3. 1, 2, 1, 2, 3, not a 1, 2, 3. Yes, it's a 33 essentially. So 3 levels, and it ends on a 1, 2, 3. Would you say if this Asian session low gets taken and validates the setup for false break, you're going to see UOP? So sometimes there will be a false break low and then a false break high, and those days are interesting. But a lot of times the false break low or the false break high, and then if it comes back down, it'll be a breakout, pullback, and then trend. So I'm going to go through the chart and you'll see what I'm talking about. how to calculate when OR and IB is finished forming. And then 2, is BTMM still valid today? Although this is a beat the market maker concept or whatever, remember that my style of trading, I get all my mentor and all of this is obviously Stacey, and he actually, this is how I found his channel way back when, was I was looking into BTMM, and he had put things about the market maker cycle and all that stuff on there. So this is stuff that he's taught as well. Feel free to go back through his videos and see. But false break setup if the price closes back inside the Asian range. No. It depends on the time that everything is occurring, Ackman. And I'll get into some examples of those as well when I get to the live chart. Please ask that question again and remind me. On Monday, opening range is finished. On Tuesday, IB is finished. Oh, yeah. All right, I'm going to move on. And I think once I get to some of these other examples, things are going to look a lot more, they're going to make a lot more sense. Breakout and trend. Now, these are the days, okay? These are the ones where if we have a breakout, okay, we have a breakout like this, and the time of things is lining up, price action makes sense. Let's say it's a day 2 or a first red day. And on a first red day, and we're looking for a short opportunity. I know this was not a first red day. I fully understand that. Just bear with me. If this is a first red day, and we have broke out and pulled back in 1, 2, 3, and we're in the first level, I can expect 3 levels of drop. This is the type of day where I would pull my range expansion tool, up from bottom to top of the Asian range, and it's going to give you profit targets. That is the kind of day where I would be looking. All right. So what am I looking for? I'm looking for it to break out of the Asian range either prior to the session beginning or at session beginning. I'm looking for it to pull back in either 3 pushes or, I'm looking for it to pull back to either the top of the Asian range or the 50%. When I mean the top, all right? Break out the bottom of this Asian range, this line right here, will become the top of your box. So it could pull back in 3 pushes back up to that area, or it can pull back to, at times, the 50% for the continuation. Again, all part of the time of day. Now, so those are the things that markets do, right? They break out and trend, they false break reverse, or they stay in a trading range. And I understand that I did not do trading range. They're a lot less common, but if I were trading a trading range, I would be looking for a move up from either the bottom to the top in 3 pushes, or from the top back down to the bottom in 3 pushes, depending on times and all of that. Now, this is the most important part, because I think that all of this whole concept of the Asian range is, I don't want to say relatively easy to grasp and understand. For anybody who's very new in trading, this might be like groundbreaking, right? Or anybody who's never heard this concept, this might be groundbreaking. And that's great, but I think that the concept is very easy to understand. Combining it with trading setups, though, you need to really understand these setups for it to be maximum, max effective. So looking at, I'm going to go through and do some weekly template stuff and really try to narrow in and hone in on using this range in combination with setups. This is US dollar, Japanese yen, 15-minute chart. And on the chart, you can see my weekdays, days of the week, and these lines represent the previous day's high and low. Although you cannot see the previous price action from this week over here, just keep in mind that I could when I was doing this, and this is the high of the week, and this was volume trapped high of the week, breakouts failed. This is day 1 of the 3-day cycle, meaning day 2 becomes a sell high opportunity. That being said, if you've got your Asian range up here, you can see the false break. Of course, this looks like it might be a little bit later in the day. So be it. Or you can have the sell up high over here, but that's not incorporating the Asian range. So, knowing that day 1, day 2, and we have now day 3 coming in, the market, you can see, has pushed down, and it's coming down below previous day's low. All right. Notice how it comes down in these 3 pushes. Boom, boom, boom. You get a micro W on a 15-minute and engulfment. Look at the time. This is at 6, before the session even starts, the New York session. And then we get up, and it's hard to see, but the 3 pushes back down. This is the right shoulder, essentially, of a head and shoulders. And then you get 3 levels of rise. Boom, boom, boom. This was the trade from Friday. Remember that day 3 of the 3-day cycle, you're either looking for explosive trend trades or for that day 3 to turn into a day 1. How does that happen? You get a market that's traded below the previous day's low. The breakout fails and you have a reversal. So that would be a reversal day. On here, you can see that I've also annotated the Asian range low, the Asian range high is up here, and I've got the 50%. And look at how they come out of the Asian range. Boom, drop it down another level, get that W, and the reversal. Day 3, 3-day cycle, low of the week, week 3 of drop, and also false break of the Asian range. So you're down low within the week, you're down low within the weeks of drop, and you're also down low within the day. Moving on, we have US dollar, Canadian dollar, and I'm clicking things, hold on. We've got Thursday as our day 1 of the 3-day cycle, being that we had a breakout that's failed. Day 2 on Friday, okay? This is a buy low of the day opportunity, okay, or a buy low opportunity. Now, although they don't come back down to the extreme low of the day, if you are basing things off of the Asian range, right? If you're using the Asian range to help you frame your day, it can help you to not miss trades because you're still at the low. You're at the low, you're at the extreme of your box. This is your box. There's no ifs, ands, or buts. It's the same times every single day. You're at the bottom. And notice how the candles are coming down. It's a buy low. Time, look at this, 3 o'clock. It's hard to see the times on this, I understand. But this is a trend trade back up. This is a W, down, up, engulfment of that candle. Now, again, look at the times, 9 o'clock right here. We'll go up here. So if you're coming into the New York session, all right, you've traded London, you've got the long back through the high of the day. It's expanded. You've got your expansion tool on there. You've hit your profit target. That's awesome. All right. Look how they come out of the range. 1 push, pull back, 3 candles. 2 push, pull back. And then the 3rd leg up, you get a micro W. This is a high bull candle. They've engulfed it, and now they are working it. Okay, notice they come back to that candle. So if you're looking to short this, or I'm sorry, if you're looking to continue the long on this, you need to understand that this market broke down and then pulled back to that candle. It's already done 3 levels for the day, understanding the master pattern. You've already got your 3 levels of rise. You might not get 3 full levels of drop, but look at these profit targets. You've got previous day's high, top of the Asian range. They made it down a little bit, not quite to the 50%, but it can help you as far as like understanding, okay, we're in the Asian, or we're coming into the London, or I'm sorry, if I could speak words, speech. Coming out of the Asian range, we already have 3 levels of rise for the day. Maybe I don't want to go long on this pair. Maybe I can look somewhere else for something better, or maybe I need to shift my thesis and my idea to short because we already have our 3 levels of rise. US dollar, Canadian dollar on the 5-minute chart. So we had our day 2 and then day 3 over here, okay? Day 3 can either explode, trend trade, or it can be a reversal, and that will turn the day 3 into a day 1 with a false break at the low of the week. Opening range low for the week. This is Tuesday, which means, we haven't formed our initial balance yet, but we do have our opening range of the week. Look what they do. They come up. Look at this high right here. In relation to this high over here, they put in a higher high. They have not put in a lower low. So just using basic market structure, right? This grinding channel all the way back down. And I had a previous live stream where I talked about these channels where they will grind this channel all the way down. They break out. That's the first mouse. They trigger them in, capitulate to the downside to hit stops on traders, and then reverse the market. At times, these channels will follow through, but context of the market, right? We've got a high, higher high, and we're coming down to put in that higher low. W at the low of the day, explosive move up. Rise, level 1 consolidation. Rise, level 2 consolidation. Rise for level 3. This one moved from the New York session all the way through to essentially the end of the day. And then they went into consolidation. This is a great example of if I were to take a fib tool and not using it as a fib tool, just using it as 100% expansions of a range and just dragged it from top of Asian range to low, I guarantee you would get a relatively decent profit target for the day. So this is the stop hunt low rise example. And for YOP, wherever YOP, hopefully you're still in here. Notice that the London session stop hunt was the intended direction for the day. Stop hunt rise. There's still a trade in the London session to go short. That being said, you need to understand the grand picture of things and really know price action. Okay, they just made a higher high. Good stuff. All right, they're grinding lower. What do I need? What am I looking for using the time? On a smaller time frame, that's a W, or I'm sorry, an M at the high of the day on a smaller time frame. All right, so they don't quite make it back to opening range high, but it did go from, for the week, opening range low, almost back through opening range high. Another example, US dollar, Canadian dollar. I know I just went back through US dollar, Canadian dollar and pulled some examples. I'm going to go back through the other pairs as well and find all the other examples from the week. And for anybody in Discord, I was already, throwing some of these things up in there. No one said anything about them, but I was trying to basically front load this live stream so people had things to look at. Just looking at the Asian range, all right? Stop hunt high from the bottom of the range to the top of the range. 1, 2, they hit the high of the day with an M. This is a micro or like a little head and shoulders. This is the 15-minute chart. It pulls back inside and capitulates to the downside. And then you get your 3 levels of drop from the top, all right? You got your M, drop down 1, 2, 3. End the day in consolidation. I think, yeah, it was UOP. He's saying, again, this is another example. Stop hunt high, drop, stop hunt low. Or it's not even stop hunt low. It's just they came down and made a new low, and then they pulled back inside. So not every day will there be a stop hunt low or a stop hunt to the higher low and then a range expansion of the range. But, if you get this, okay, well, where's the first place I can take profit? I've only got 3 options now. I've only got 3. I've got the 50, full range, and an expansion of the range. And then you can see my notes, day 2 after first red day. So this was a first red day over here. 1, 2, 3 to the high of the day, high of the Asian range. Boom. All right, so that concludes the slideshow. And I know that I went probably a little quick through it. At the end of the slideshow, does anybody have questions for me right now? That I need to go back through the slideshow before I move on to live charts and looking at last week's price action analysis of the week. Anything? Let's see. If you have first red news on, if you have news on euro that affects all day. All right. So if I've got news on euro, so like major red news that doesn't affect the euro until later in the day, I don't know, I might not trade it. But kind of like when we get that late news in the U.S. session, 1400 news, maybe not the pair for me. Slideshow is crystal clear, phenomenal. I've noticed that USD CAD uses Asian range almost every day. In my opinion, everything uses Asian range every single day. I can go to the NASDAQ just because it's based off of opening range, the concept of it. I think that it works. What will happen to gold? I really wish I could predict the future. Slideshow is crystal clear. Let's see. Now what I can do with gold is I can go back and give you, a reasonable analysis of what's happened using this concept. New to ADR indicator. Anyone maybe refer a good one for trading view? If you're looking for the average daily range, just type in ADR high-low or something like that, and it should come up. First red day setup. How would you have traded using Asian gold? All right, so we want to see some live stuff. Cool. Let's get into it. Let me pull up the last time people were saying that they couldn't see. Let's see here. Trading view only. Let's get rid of. Hold on. Sorry for this. Let me get. Things are moving slow. There it goes. Oh, no, wrong one. All right. So, last week we had Euro USD. And I still got my annotations up there from putting all this up on the Discord last night. So, let's start at the beginning of the week, okay? And I wish I could, can I get the, all right, bear with me, 2 seconds. I'm just going to put up the previous day's high and low up here so that makes things, internet's being wonky. Previous day, high and low, boom, get that up there. Yeah, we'll do circles and circles. There we go. Things are a little bit more clear now. Monday, first day of the week. Okay, we broke out, and it gives us our opening range for the week. How do they come out of the opening range? Do they pull back inside on that Tuesday, or does it stay outside and continue? It continues. So we got one push. Okay. Wednesday, does it false break on initial balance high, or does it continue? It continues. Okay, so now we've got two pushes. Thursday, again, third push into the high. Whole idea being the whole market revolves around the three pushes. Okay, but Thursday comes up and it's a false break of the high, and that gives us a first red day. Now, all of this watch list that you can see over here, this is the watch list that I had from Friday, okay? So on this day, we have a high of the day that is broken, the previous day's high that's broken, and it's pulled back inside, giving us day one in the downwards direction of the 3-day cycle. We can only see top right of your screen. All right, everybody in the stream right now, is everybody able to see my chart right now as I'm going through this? Can everybody see the full chart, or can people only see the top right corner? I need to know real quick before I keep going so that I don't just show you all some craziness. Left and bottom is cut off. All right. I think that I can see pretty much what you all are seeing right now. All right. Cool. Good stuff. I'm gonna keep going then. Cool. All right. Back to what I was saying. Day 1, 3-day cycle. We're going down now. This is also a first red day. We have a day that's open, traded higher, and then closed lower than the open. Day 2, that means we're looking for a sell high opportunity. Now, we understand the Asian range. Everybody in the chat who just watched this stream and has seen the chart or seen the different types of days framed, what kind of day does everybody think this is? Is it a stop hunt high drop, or is it a breakout and trend style of day? I just want to see, did I do a good job teaching? Everybody throw it up in the chat real quick. Is this a stop hunt high drop, or is this a breakout and trend style of day? And then once I get some answers in here, I'm going to throw up an explanation of this whole thing. Breakout and trend, breakout and trend. I'm seeing a lot of breakout and trends. Maybe I didn't do too bad of a job teaching it. All right, good stuff. 3 is a crowd. So, yes, this is a breakout and trend. All right. We had no direction outside of the Asian range. If this would have came up like this, of course, that would be false break high and then trend. What does happen is, I'm going to zoom in on this a little bit, and I'm going to make sure that you all can see in the video. There we go. Notice the push up, down, up, reverse. Okay, so this becomes 1, 2, 3 to the high, up, down, up, reverse. Let's get our M marked up. That is an M at the high of the day. Okay, now on a smaller time frame, this is probably going to look a lot different. End of the European session. Boom, boom, boom. And then, of course, you can see the capitulation. All right, so how does this help us as far as, this would have been a great London trade. Coming into the New York session, how do I know that maybe this is not going to keep going down? I mean, the reality is I don't, okay? What I do have, though, is my range expansion tool to see, have we completed 3 levels using the range expansion tool. I also have price action, okay? Comes out of consolidation. Pull back. 1. Come down, make a new low, pull back. This could be 2. Capitulate to the downside, 3, and then the W at the lows, coming into the New York session. All right, so we have a W at the low. This high right here is the high. They break it. And this is what I'm talking about. This is why I'm saying that the time of everything is very important. Make sure you all can see this and blow it up a little bit. You can hold the shift key. I know. Y'all have been told me about a million times, and I am just stubborn in my ways, I guess. All right, so they stop hunt to the high, break the high. This is a W. So at this point, they come back down. 1, 2, 3. Look at the time. 1, 2, 3. A micro W again. The engulfment. 8:15. 8:20. And it goes back up. Whole idea being, this was first read. I'm not saying that you had to trade this. What I'm trying to illustrate is, basically is that if it's already gone 3 levels down and gone into consolidation and made a higher high or a lower low, to keep yourself from being trapped and trying to trade some ridiculously small or silly move, either look at something different or, go long instead of getting trapped going short. So that's the euro. That was the whole week for the euro. The whole idea is, if you want to take one great trade, there it is right there. 1, 2, 3 to the high. Stop hunts the high, first red day. Let's go to oil. And I think I still have, pull up the 15. Hey, if y'all are having problems with buffering and all that stuff, or it's closed out the stream or whatever, just refresh and come on back in. Is it possible to make it full screen? So hold on, let me there we go. We got the times in there. Lock that in there. All right. Oh no, messed it up again. All right, so now we're on oil. Okay. Sean, I think I've got I just fixed it so that the time is in there. Days of the week, Monday. All right, so starting off the week, we have day 1, 3-day cycle. On a day 1, day after that, right? So look at this. First day of this week, we had a first green day. That's where it opened. We traded down and then up, giving us first green day. Meaning that on this Tuesday, we're looking for a buy low opportunity. And I think that similarly to the euro, who can agree that this is a breakout and trend style of model? I always struggle with trading a pullback. I'm going to show you something awesome for that. Just you got to understand market structure. Okay. Day 2, we're at the low of the day. I'm on a 15-minute chart. Okay. Look at the time. Again, it's like clockwork, same time every day. They start moving coming into the London session. There's some kind of move. It could be a false move or it could be the intended move for the day. Down. I'm sorry. This is like a W, okay? So I need to blow this up and it's not, I don't know why it's not letting me do that. Well, there we go. Holy cow. Amazing. Down, up, down, and the reversal. Okay. Same time every day, just about, it's these new hours starting. So you have this smaller pattern down here with the engulfment. Now, I can put this tool on there. One full expansion of the range. And then just looking at the price action, right? Where does New York start? So we're in the second, when New York starts, we're in the second, is this the second push? Where's 8 o'clock at? All right, so this is what I'm getting at. I was just trying to locate the times of things, all right? We've had one push out of the range. When New York opens, we've now had our second push out of the range. Okay. And then if you wanted to say this was the third push out of the range, you know, in hindsight, we can see that it wasn't. It pulled back and continued. But look at the time. We have one push out of the range, two pushes out of the range. So we have the idea now. We have two pushes out of the range. We probably need a third push, right? Now you can frame a trade idea around that. Let me drop down to a 1 minute chart. Look at the times. Here is the low of 8 o'clock right here. And they come down on the 1 minute chart in three pushes. Okay. This is whoever just said they were struggling with pullbacks. We have one push out of the range, two pushes out of the range. We're still in an upwards moving market. There's no reason to be going short. They drop it down 3 levels. Go into consolidation. If I could zoom in on this, which I'm trying to figure out why I can't. You have the little micro W down here and the engulfment back up through the high of the day. That's the trade right there. Trend trade. You're in the second level. We have one more level to go. You got tight stops and over 70 pips of profit. That's all you need. It doesn't matter where the market goes after that. That's the trade. All right, so I'm going to get back on the 15-minute chart and get out of this so I can look at the rest of the week and we can understand the entire week. All right. And I don't understand why this is... There we go. So like I said, day one, day two, buy low. We saw the one level up. We were pushing up into the second level for the trend trade. Day three does not take out the high prior to the New York session open. All right, so let's get into this. And I haven't made a video about parabolic trend trades yet, but this is something extremely important to note. Ignore everything past 8 o'clock. That's 8 o'clock right there. Up until that point, there has been no previous day high being hit. And it's been squeezing all day long. Look at the Asian range. There's Asian range high and the Asian range low. We have one push into the Asian range, two pushes, three pushes down into the bottom of the Asian range, and the market is coming back up. Look, the micro W at the low of the day, the low bear candle, to work the low bear candle, right? It's the same stuff over and over again. Comes back up. This is a squeeze. This is a parabolic trend trade squeeze on day three. I mean, this is like the definition. This is all it is. Haven't taken out the high. We're consolidating under the high, and it's squeezing Let's see, 7:45, 8 o'clock, first bar. Do you have 50 pips of range, even if you were to take a really crummy entry with a 1 bar stop? Yes, you do. And then, of course, it continues. But the idea of the Asian range, they pull out of the Asian range. This is day 3 trend. And then they come back down to the 50%. This is a very crude 50% right there. I'm just eyeballing it. But look, out of the Asian range, 1, 2, sideways, 3, engulfment. Okay? So that is a breakout, pull back to the 50% of the Asian range, and they continue. And you can see this ending in the 1, 2, 3, and then they end the day in consolidation. Could you go over examples of entry criteria on the 1-minute chart? Absolutely. In fact, we'll look at this one because I have a feeling that a lot of people are struggling consistently with entries on the trend trades, the day 3 trends. I'm going to delete all my drawings. This whole entire class, I do want it to be about the Asian range, but this certainly will help you. So from what I had already showed you, you know that this is squeezing higher. Let me get on here. All right, so they have the pushes down into the low. Let's see here. Where is 7:45? I'm going to start going through some of these times to look at time engulfments of time to find where people are trapped. Okay. 7:30. I don't remember what time this was. 7:45. So from this, I want you to notice that they're going down, but then they're not going anywhere. Okay, that's what a squeeze is. You're going to notice in a squeeze that things are very aggressive to one side, and then it just stops, and it shouldn't. If it was an aggressive move, it would just keep going, and then it'll reverse, and you'll be like, "What the heck just happened?" 8 o'clock. And where is the low of 7 o'clock? I think 7 is up here somewhere, isn't it? 8 o'clock opened up back inside of 7. So like my entry criteria, right? I need a low formed. I need 3 pushes back into the low. And I need the time to line up. And I need an engulfment. And I need some kind of chart pattern. And if you're looking at this, you can see the head and shoulders. All right, so that's good enough for me. If I have this idea that we're squeezing through here, we're at a level of, I'm going to call it support, but don't mix my words up. These trend lines are important, right? We know that there is some kind of support and resistance. Understanding that support's meant to break, resistance is meant to break, but it gives you a reference. There's a W. We're in our timing window now. And the higher high. Okay. So we have we're consistently breaking structure to the upside. 1 push down, 2 pushes down, 3 pushes down in the engulfment. And this is coming into the second hour. And then, so notice, and this is why I told you, see these times, right? The 7:30, 7:45, 8 o'clock, flip the book. We're going back up now. We're at 7 or 8:15. I bet you it opens up somewhere around the 7:45, 7:30. Yeah, like perfectly on this high. So this is the 815. Everybody in the chat, all right, who when they flip this, where is everybody trapped? Okay. You have candles opening and trading down. You have candles opening and trading down. Candles opening, trading down. 815, candles opening and trading down. But it's not going back down. It goes down and then it just comes right back up. What you're seeing is the wicks. What you're seeing is the wicks on these 15-minute candles, but you're using the 1-minute chart. Where's everybody trapped? Well, they're trapped under here because they're not coming back down there now. They've just made a new higher high. They flipped the book. So when they flip it like that and everybody's now trapped underneath, they probably have done their work down low. If you have the idea, they've gone up. They have not taken out the high. We've consolidated under the high. They need to take out that high. 1, 2, 3, and an engulfment going into the next hour. That's your trade right there. That's framed. You get your pips. You're done for the day. All right, so I'm going to take a quick second. Like I said earlier in the stream, everybody, I do put a lot of work into this, and all I ask is you please like the stream. It really does help me out, and it's really, helps the algorithm for YouTube and brings more and more people in so that we can continue to grow as a community. So if you're sitting there right now watching this, please do me a huge favor and smash that like button. And if you're not subscribed to the channel, do me an even larger favor and hit that subscribe button. I consistently post at least 1 to 2 times a week for long form content, and at least one live stream per week on YouTube every Sunday at 9:30 a.m. All right. Now, I don't want to lose momentum here. You need to understand for these entries, you can visually see it too where they flip the book on the Asian range. Volume trapped, low of the day, Asian range. Volume trapped in the upper 50% of the Asian range. And then the higher high, right? The explosion, day 3, trend day, explosion trade through the previous day's high. Now, it pulled back. And that's fine. You already got your money. You're done. But let's move on. That concept does not just stop here with oil. That is a across the board consolidations under the high on day 3 is a trend, a parabolic trend potential for the trend trade. Good Lord. No, I don't want to do that. I want to end this. Yes, there we go. How would you trade level 2 after the breakout? Is it safe to trade that? Yes. Well, nothing in trading I'll say is safe, right? Anything could happen. You can mistake level 2. You're already in level 3. But what I will say is flip between the time frames. All right, so we're on the 15-minute. You can see 1, 2, 3 down. It's very clear, right? We had a stop hunt at the high of the day. They've come down 1, 2, 3. And be aware of that. So like you're at the 50% on level 1, come down level 2. You have a 1, 2, 3 to the high. Trend trade back down. But let's look at the rest of the week real quick. All right. So I just went over day 3 trend trade, day 1, day 2, day 3. The market did not reverse. On this day, though, we get our first red day. Hits the previous day's high, reverses below the open, giving us the first red day. And as you can see, everybody who was like, okay, first red day, London session, I'm looking to sell high. There you go. There's your sell high, London session. But coming into New York, this is how you don't get stuck trading the low-hanging fruit continuation when there's no more fruit to be, to be had. 1, 2, 3, and they finished it 1, 2, 3 in capitulation candles. Did we go to the low of the week? Almost. We at least came back and got this guy. Nope. Sorry. Okay, was this like the 50% of the opening range or something like that? But regardless, just look at the price action and the understanding this range. 1, 2, 1, 2, 3, and then you have another push down. We're about to start the session. We haven't even started yet, and we have a consolidation on oil at the low of the day. Maybe we don't want to counter trend. Maybe we want to take this back to bottom of the range, 50%, which it did hit. Okay. If there's no more fruit to be had, either don't trade the pair. If you look like you're in the third level, extreme caution. Maybe take a second look at price action and go, wow, we're in a consolidation. It's gone 3 levels. It's pushed 3 times. But it's a first red day. Ooh, I don't know. Really get yourself thinking instead of just going blindly into things like, oh, it's first red day, I got a short. No. First red day is a sell high opportunity. The sell high was up top. The sell high was level 2 going into level 3. Now you're down low. All right, I need to change my mindset. Good stuff. Let's move on. Let's go to, I already did a lot of examples from USD CAD. Let's look at an index. Let's look at the NASDAQ. I know that a lot of people in here probably trade the NASDAQ. Day 1, 3-day cycle. Volume trapped, low of the week. Day 2, you get your buy low. This was a first green day. Buy low opportunity. You can see that it squeezed pretty good. Boom, boom, boom. Day 3, blew off in the direction of the trend. I can see it already. Hold on, let me zoom in. Consolidating under the high without taking out the high. What time? Oh, look at that. Coming into 9:30. New York session. Blows off in the direction of the trend. Now, that does give us, so we got day 1, day 2, day 3 reverses, and we can consider that a first red day. This looks to be quite late in the session, and this turned into an inside day. Okay. Yeah, so this is like late afternoon session. First red day, sell high opportunity, but the inside day, oh, we have a double inside day now. I haven't even looked at this. Day 1, day 2, day 3, turned into day 1. But something very interesting about this pair. Double inside day. Okay. What could happen on this? This was day 3, right? This turned into day 1. This was day 2. Should have been day 2 down, but it didn't go down. All right. Now we're potentially trading higher. What could happen is this could become trap volume. Or this, flip the idea. I don't know how many weeks of rise we are on the NASDAQ. And I don't want to give anybody, this is not trading ideas or anything like that, just understanding the 3-day cycle. This could become an area of trap volume, and they could move the market higher. But that's not what this stream is about. I just want to look at the Asian range. Let's move on to something like, what did Australian dollar, US dollar do? Let's look at the weekly range. Opening range high, opening range low. Notice that their breakout has failed on Tuesday, giving us day one of the 3-day cycle down here. Day two of the 3-day cycle occurred on this Wednesday, that being a buy low. Where do we get the buy low? It doesn't happen until the New York session. We get a false break of the Asian range up top and an M. I need to see 3 levels of drop before I'm willing to take a long after the M. All right, so we've got 1, 2, third down, right? The engulfment, and then I think there was news. This had to have been news, yeah. But you've got an understanding of the Asian range, right? So you've got the 50% down here acting as support. False break of Asian range, 1 level down, 2 levels down, 3 levels down. Use time, etc. There was news, so it consolidated, blah, blah, blah. All right. Day 3 of the 3-day cycle can sometimes become day 1. On this particular day, it was an inside day. So we move the day 3 over here. This inside day, however, let's see here. Where do they open? I can't tell if that was closed as a red day or not. But, so maybe this isn't quite perfect, but look at the Asian range one more time. We'll look at this Friday. Stop hunt to the high. False break. So stop hunt high, drop, right? Up, down, up, engulf the M. And 1 level of drop, 2 levels of drop, 3 levels of drop. So 3 levels of drop, 3 levels of rise will help you to stay out of crummy trades and poor setups. If you already have your 3 levels of drop and you're coming into the New York session, I've said this like 4 times now, and it's ending on a 1, 2, 3, maybe this is not the short trade for you. Plus, you've got the engulfment. Okay. This one did not really take off as much as it could have or should have. They did 3 levels of drop and just went to consolidation. GBP USD. So I had annotated 3 days of previous day's breakout traders. Let's see, we had 1, 2, the third. I always have my trend line up there. Day 1 of the 3-day cycle. So we've got day 2 coming down. Let's take a look at the Asian range. This was a breakout and trend model, but you still have your M up high. All right, so you've got 1, 1, 2, and then you're down here at the lows on that third push down. Again, if you have 3 levels of drop coming into a session or 3 levels of rise and you're looking for a continuation, you're playing with fire. US dollar, Swiss franc. Let's look at the whole week once again. We had a lot of consolidation up top. Day 1, 3-day cycle. Day 2 was a sell high. Blew off the direction of the trend. So now we have maybe volume trapped. Day 1. Day 2. Actually, this cycle looks a little wonky. No, I'm going to retract my previous statement because of this volume trapped up top. So we've got day 1, day 2, continuation of the peak formation. Day 3, down low, with the volume trap down low. So day 3, of course, being the day that either becomes day 1 or the trend trade. Obviously, this became day 1. This was the reversal. And false break of course, this is whole entire class is supposed to be about the Asian range. So you've got your Asian range right here, framed out. And you've got, they're jamming down into the low, right? This is a very sloppy, gross looking setup, but mostly in consolidation. All right, everyone loves gold. Let's, I'll take a decent amount of time here with gold. And then I think that I'm going to, after gold, probably start taking final questions and wrap it up so everybody can enjoy their day. I know I've got a long day planned. All right, let's get into gold. Everybody loves gold. And I'll go a little bit deeper with this one. Okay, we've got opening range high, opening range low for the week. And I'll annotate this. I know this looks weird because I got it scrunched up. So we got high. You got your opening range low down here. And remember I said that I always project those lines across, and I want to keep them there because they're important for the whole week. What does Tuesday do? Tuesday extends the opening range, giving us our initial balance, but it does not follow through the initial balance. Giving us our initial balance low, and of course, after Tuesday trades, we know that this becomes our initial balance high. That's all we know, all right? But market structure tells us that we have a large consolidation at the low of the week on this Wednesday and a higher high. Let's look at the 3-day cycle. Trap volume, high of the week. Day 1, 3-day cycle. 3DC stands for 3-day cycle, for those of you who do not know. Day 2, in the direction of the peak formation. So we have a short bias at this point, and I believe this was a first red day as well. Yes, first red day on this day 1 on a Monday. Day 2, 3-day cycle. Let's zoom in and take a look at the Asian range. Let me get the low and the high. There's the low. I understand that's probably a little bit difficult to see on the screen. Okay, low and the high. So you can see, obviously, this is a breakout and trend model on day 2, which is really what you want to see, ideally. Breakout, pullback, continue. So this could be, if you're looking at this in live time, right, you can say, okay, well, that looks like maybe level 1. Level 2, so remember, level 1 is the first leg, level 1 consolidation. The second leg is level 2, and then you have consolidation. And then the third push down would be level 3. And obviously, they've extended it. Let's take a look at the range expansion of this level 2. And I mean, look, down to level 3 is 2 full expansions almost perfectly. So that can really help you get good price targets, right? If you were coming here in the New York session, was there a continuation? Absolutely. Let's see here. All right, let's zoom back out. We had our day 2, day 3. A lot of times will become our day one, right? If it were to reverse, this is a very obviously a first green day. We've worked the low, blah, blah, blah. Traded up, look where they traded back to. Trap volume, low of the week. Day one. Day two, in the direction of the trend, back up. Actually, I'm sorry. This day two is going to turn into a day one based off of the trap volume at the low of the week. Regardless, all right. Let's look at price action from this day. You got your Asian range high and your Asian range low. Very informative as always, Cameron. Thank you much. Heck yes, like what did I hear? Anytime I see people saying that it's getting clear to them and these things are helping, that is exactly what I want. I want everybody to be able to prosper. Let's see, we got, so look at the price action, okay? Day two is a buy low. They hit you with this big, scary, real scary, right? Real scary capitulation candle to the downside. Oh no, whatever could happen. Let's go down to a lower time frame. All right, so we've got our M at the high of the day. Okay. When they come out of this consolidation, look how they return to the low. Out of consolidation, 1, 2, 3, reverse. So this becomes a big peak. Let's see, on a 1 hour time frame, is that a big pin? Yeah. So it becomes a big pin to the low. Hey, how's it going? All right. Let's look at the 1 minute chart. And the reason I want to do this is because these entries used to be really a little frightening, right? Because you've got this huge candle coming down. But if you understand the setups and you understand that it's a buy low, they just brought you down low. Thanks. You know, thanks for getting me where I need to go so that my risk to reward will be higher. Come out of consolidation on the 1 minute chart. You can see it very clearly on this time frame. 1, pull back. 2, 1 bar pullback. And then the 1, 2, 3 into the low. You're going to see this exact pattern, this little consolidated jibber jabber that everyone says is noise, but it's not. Once you understand the pattern. Beautiful. I mean, as you really can enter that with confidence, in my opinion. 8:45. $8.30 is all the way up there. Brought you down low, give you a W at the low of the session, and an engulfment for the move back up. Not only through the high of the day, but a range expansion of that. Almost perfect, right? So that can give you your idea. Actually, I think the Asian range is right there, isn't it? There we go. Want to do it the same way every time. So it still gives you a really good profit target. All right. Let's zoom back out and look at the rest of this week. I think I actually made it through the week, if I'm not mistaken, because we had our opening range low, false break of opening range. On this Wednesday, they pulled back inside, back up through not necessarily through the high of the week, but back up to the high of the week. All right, with that, everybody who's still here, I want to thank you all very much for being here. Please do me a favor and, one, like the stream, and two, before you dip out of here, please ask any questions that you might have. You all know that if you've been here long enough, you know that I will stay as long as it takes to answer any questions. This is your opportunity. By asking the question, I guarantee you, if you have the question, at least 10 other people do, and they'll be able to benefit from it as well. So please throw those questions up there, and let me get them answered. I'm going to wait another 20 seconds. Where's the whiteboard at? You know, I don't think I've made it to that level yet. I've not made it to the whiteboard level. Maybe one day. We joke, but those are some of the best videos. If you really understand what he's saying in them, his teaching style has definitely evolved over time, but those offer some of the, I mean, those are the gold nuggets that you just never really expected. Next stream, yeah. Definitely. I'll make sure to get like a 50-inch whiteboard. All right, seriously though, any questions? So I told you all, I think the last stream, that I was going to be implementing this immediately in my trading. I did last week, and my results were phenomenal. I mean, I was through the roof. My confidence has always been pretty good with entries. It's been holding, and I don't know if I actually really touched on this too much, but I've implemented in my trading system now that I've only got 3 places, well, really 4, that I'm allowed to take profits now, and that is that level, that level, that level, and then an expansion of the range. This filters out a lot. Yeah, it really does. I'm loving it. Great stream, understanding the AR concept. Thank you. Can we go over NASDAQ 100 trap volume? Yeah, and I'm not a genie, all right? Let's just be very clear. I cannot predict where the market's going. I can only do what the market's telling me, react off of what the market's telling me it's going to do. But what I can tell you is that the market's currently going up. We've just had a double inside day, and the 3-day cycle, 1, 2, 3. This day should have been a day 1, and it is. And then day 2 should have followed through. It didn't. Day 2 turned into an inside day, which means that this would have been day 3, but day 3 is an inside day as well. So now we have a double inside day. So I'll just frame out what could happen. We have a double inside day. This might turn into trap volume for the market to continue going higher. One option. Or this could be the framework for a massive false break of this, right? And it goes back down. So it's still day 2. No, it's day 3. Because day 1, day 2, remember day 2 is allowed to become an inside day. If day 2 or if day 3 was an inside day, you would shift day 3 over to the next day. But because day 2 is allowed to be an inside day, and then this would have been day 3. Okay? But day 3 turned into an inside day as well, so it's still, in my mind, day 3 of the 3-day cycle. that is my outlook, my perspective on the matter. Is that first red day and inside day on gold? Why am I on the 1 hour chart? Hold on. They did hit the previous day's high in this chart. And this is not one of the first red days that I'm particularly... I mean, that is borderline. That is very, very borderline, in my opinion. I don't know. This is definitely one that I would have to let the chart tell me what it's going to do. Stacey Burke video is better. That's awesome. Is that first red day, inside day? Okay, got that. Yeah, sorry, I meant Friday is day 2. Yeah, Jason, my outlook on that is it's day 3, because day 1 was on Monday. I try to look at things as like if it wasn't hindsight, right? So like if I was looking at it, I can't see Thursday. All right, well, I can see Monday. And I know that every other day, I would say that that's trap volume at the high of the week, right? So this is day 1. Day 2 is allowed to become an inside day. Okay. Day 2 also should have followed through. It didn't. All right. So day 3 of the 3-day cycle normally is the day that you would get something like this. Boom, boom, boom. Or the inside day trend trade, right? So the explosive move out of the day, or of course you can go to the downside as well. That didn't happen. We have a double inside day. That doesn't happen very often. I'm going to eat my words on that because someone's going to go and find 1,000 double inside days, and I'm going to get 1,000 screenshots. But they happen a lot less often than a lot of these other things. All right. I used to skip through the whiteboard parts. Whiteboard is for pros. Whiteboard is for people that can really follow along with the lingo, and I think that going back and watching them now with a phenomenal understanding is highly beneficial, because you can follow along a lot quicker and easier than someone who's new, not only to trading but new to the system. More detail on trend trades, low-hanging fruit in your next stream. Feel uncomfortable. I mean, maybe the next stream will be all about low-hanging fruit and trend trades. Hey, Jason, my best advice is if it's confusing and you're like, wow, I just don't understand, there's a billion, I'm not going to say a billion. There's a lot of other pairs, right? And there's a lot of other things to be traded. I think gold and oil provided a lot of great setups this week. Honestly, a lot of the pairs had really great setups this week. You just got to zoom out. Wednesday did not take out Tuesday's low. Wednesday traded down to Tuesday's low. And it's also not the low of the week. Remember, day 1 is higher low of the week. It's like the low of the week is down here. The high of the week is up here. So like this took out the high of the week and reversed, because Wednesday, right, we got the high of the week from Tuesday and it reversed. Wednesday didn't reach yeah. All right, everybody. I think with that, I'm not receiving a lot of questions, but I have received some good feedback from you all, and I really do appreciate it. I really do appreciate everybody being in here and spending this time. I really hope that the slideshow is beneficial. Before you all go, if you have not already, do me a huge favor, hit the like button. It's going to help the algorithm and help my channel. It's all that I ask. I don't ask for any sort of paid content or anything like that. I do all this for free, and I just want to see everybody, grow and be able to experience the same experiences that I have. With that, it's a beautiful Sunday. I hope you all have a great day, and I will see you all in the next video, the next stream. And if you're not in the Discord, please get in there, because it's a wonderful community.